Good morning, Myrna. Welcome.
Good morning. Thank you.
To use this feature, please make sure you're
Perfect. We're gonna get started on gonna probably be some couple people coming in as we go along, but first off, let me get my notes in order. So I do want to talk about pivoting from Hometown Heroes. Their original estimates were 6 to 8 months in terms of how long that those funds were going to last. I thought 3 to 4, and it's actually not even probably going to be about 2 flat before those funds come out. So a lot of people are utilizing this as marketing, a lot of realtors in terms of down payment assistance. And so we're going to see a really big cool down, I think, for the next couple months. There is no word as to when they will basically re-up on their funds. But there are alternative options, like I mentioned to you guys before, not as open as Hometown Heroes in terms of the guidelines, but definitely something that's much better than you would see for city and county down payment assistance programs, which is the Florida Bond, which is what we used to do before Hometown Heroes opened up anyway, because it is for everyone that is a first-time home buyer. The Florida Bond is slightly different in terms of the guidelines, obviously lower income limits, slightly lower purchase price limits. I think they're at 380 something for this year. And the income limits are at 90,000 for 1 to 2 household and 110,000 for 3 plus household. So it'll tighten up definitely, but it's still a good alternative to get people to get pre-approved, fill out the application, because like I say, once they see that it's possible for them, like I told you guys in the past, what ends up happening is that they end up finding money, right? They end up realizing they got a 401k, or they got somebody that's going to help them out, or whatever the case is. So the Florida Bond will give them $10,000 if they do qualify for it. But the point is to get them to fill out that application and to get that consultation going, so that way we could sit down with them and let them know it is possible. You just need to do X, Y, Z. And a lot of times they build confidence that way, and they'll end up finding the money if they need to. So just start understanding that we are going to have to pivot away from Hometown Heroes. There's $12 million left as of this morning, and that's probably going to be gone by the end of this week. If not, for sure by next week, all the funds will probably be pretty much gone. So start letting your clients know, especially the ones that were pre-approved for Hometown Heroes. If they were pre-approved with us, send us an email about who it is so that I can look into it and at least let you guys know before you waste your time that 9.5, maybe. See if I refresh it. No, it says 12 million here, and I just refreshed it now. Let them know, or let us know, so that way we can look at the applications and make sure that at least that same client will qualify for Florida Bond at worst case, so that way you're not wasting your time showing them properties and stuff like that, knowing that this Hometown Heroes is going to run out relatively soon. If not, then we need to have that conversation with them about finding the money, right? Yeah. So last week or the week before, because I don't think I had Monday Mortgage Minute last week, but I have access to
Mike, real quick.
Yeah.
Before you move on from Hometown Heroes, what is the cutoff date that you believe the agents us will be able to lock in those funds? Like, what's a safe date that we can tell our clients, hey, we need to be under contract by a certain date?
This week.
Okay.
Yeah. I mean, I'm maybe Wednesday, Thursday, to be honest with you, would be something safe. I think by last week we had, what was it, 22.5 million. And literally the next day I refreshed it and they were down to 17 million. So they basically reserved about $5 million in funds in a matter of a day. So yeah, we need to get them under contract. If not this weekend, which I sent an email to you guys all this weekend as well, before on Friday before we left for the weekend, to let you guys know that to try to get your clients under contract this weekend and let them know that it's imperative to do so, especially if they're depending on Hometown Heroes, because these funds are going to be gone very soon. And then we're going to have to kind of pivot into that Florida bond territory, which is still possible, just a little bit more difficult, especially for the clients that do make more than $100-something thousand a year, right? So last week I did get access to Fannie Mae's CPM, condo project management, where in the past Fannie Mae CPM was pretty much only used by essentially execs that had access to that portal. But this year, Fannie Mae did basically tell lenders that they would have to report every single condo that they've done into the CPM, into the condo project management. So every single lender has to report every condo that they do into this basically database that Fannie Mae has created, which is a huge plus, and also could be a negative as well for us in general, especially that I have direct access to it, that I can tell you within minutes if a condo is Fannie Mae approved or not, right? It's a huge plus because now if that condo is approved directly by Fannie Mae, all we need to get is a master insurance policy. We don't need to get the condo questionnaire. We don't need to get the budget, nothing. We just need the master insurance policy to make sure that that insurance policy is still in place from the time that Fannie Mae approved it, okay? That's a huge plus that comes from it. The negative is if it's on the unavailable list, it is almost virtually impossible to get that overturned, especially if it was from Fannie Mae directly. Or even from another lender, because the way that they're going to look at it is essentially this was denied by this bank or this lender, and now you're going ahead and approving it. You're going to need to have a real good reason as a lender as to why you're overturning that original denial. And when I say everybody has access to this, I mean everybody, like Chase, Wells Fargo, Bank of America, these banks that do not like to do loans, they just advertise it, and they also deny these condos a lot. So to overturn them is going to be difficult at times, depending on the reason that they put in that Fannie Mae CPM. So it's a good and a bad thing at the same time. The good thing is that I'm able to tell you guys right away, if you've got a listing, if you've got a buyer that's looking at a condo, whether we're going to be able to do this upfront or not, as opposed to looking at the budget's good, and then you find out that there's issues with their 40-year recertification or their 50-year recertification and things like that. So rates, actually, even today, I thought that this week we'd have not even just a better week, but a normal week, because there really isn't a lot of major news that has come out. But looks like we are opening up the day negative 39 basis points. I mean, we're just getting destroyed at this point. Rates are probably going to touch the 8s. If they don't already by today, we're going to see interest rates at 8%. So this is another obstacle that we're going to have.
Oh my gosh.
Yeah, in terms of talking to clients and affordability, because it is going to be a big thing now where, for instance, the other day I had a client makes like $70,000 a year, $72,000 a year, barely any debt. And I was able to push her up to about 300, maybe 325, which is, I mean, you're talking about a couple of years ago, you made $70,000, you probably get approved for 400, 450 by yourself. And now we have to go to her and let her know how low her pre-approval is and see if she has a co-borrower or co-signer. Affordability is becoming a real issue as rates increase. But this is the market. We can't control it. All we can do is just focus on the clients that we deal with and trying to get them under contract as long as it makes sense for them is really the only thing we can do. I don't think that we're going to see rates really come down that much, probably until October. And that's because the reason why they even increased was the last month's consumer price index, which you guys heard inflation increased. It didn't necessarily increase. Remember that inflation's on a rolling 12 months, right? So last year's July, last year's July was flat, meaning that last year, July 2022, from June 2022 to July 2022, inflation changed at 0.0%. This year, inflation changed 0.2%, I believe, or 0.3% month over month from June 2023 to July 2023. So what happens is you have to take out last year's July 2022 and replace it with July's 2023 because we're on a rolling 12 months. So it seems as if inflation really increased that 0.3%, on the headline level. And that's what's really getting rates to continue to jump up, because now investors are thinking, Fed's going to continue to hike rates. Nothing's changed. Inflation's still elevated and things like that, when it's not really the case, because what's going to happen in in September, October, last year's CPI was at 0.4%. So if we were to continue to be at 0.2 or 0.3 month over month change, we're going to still see a decline from that 0.1%, right? So it's not necessarily that inflation is still elevated. It's just the way that it's calculated, unfortunately, is really hurting bonds in general. Next month is going to be no different. So don't expect, unless we get a 0.0% change, which I doubt it, we're probably going to see inflation tick up again, because last year's August was 0.1%. So even if we're at 0.2, 0.3, we're still showing more than we did last year, which is going to show inflation year over year steadily increase again. So it's going to be a very, very tough. It's already been a very, very tough August. It's going to be a very, very tough September as well. I think once we get into October, where we get those September readings from last year, where it was at 0.4, and October's was also 0.4, which we'll get in November of this year, we'll see rates kind of trickle back down, unless from now till then we see jobs really take a big hit in terms of people being laid off, and we see those initial jobless claims increase, or we see the Fed kind of slow down on their Fed rate hikes. But that's not going to happen till September, because that's when their next meeting is. So we're kind of free falling right now, basically, is what I'm trying to tell you guys. And I don't know exactly if it's going to stop within the next month or so. I can tell you that probably by October, if there's a date, a safe date, it'll probably be October when we get that CPI number, and it's going to show inflation kind of decreasing, unless we get a surprise in September. Fingers crossed. Housing starts for July were up 3.9% from June, which is actually to be expected because it was before the sharp rise in rates. And the housing market index, which is the index for the National Association of Home Builders, which are actually the people that create inventory, right? We know this, that comes out every month, and it showed an actual sharp decline for the first time. And I think we were increasing for like 6 to 8 months in terms of their home builder confidence. And we got the first decrease to the number 50 this year. And remember, that is that housing market index is a scale from 0 to 100. Anything above 50 means expand, or signals expansion, means they're going to continue to build, which they were at before. They were at 56 last month. Anything below 50 means contraction, means they're going to slow down building or stop building entirely. And for this month, they're right at 50. If rates continue to get bad next month, they will probably be below 50, which is going to signal contraction again, which means less inventory coming out on the market, which means that home prices still stay elevated, even with interest rates being high. So once again, I guess you could see that that's a slightly good thing. I don't necessarily think it's a 100% bad thing, because if there is no inventory like we're seeing now, home prices are going to stay elevated. But the problem with that as well is also affordability is still going to be a big issue if rates are still elevated, right? So it's kind of a give and take. You don't want the housing market to completely come down in terms of pricing, which even if it does, I was actually talking to a good friend of mine last week. We had lunch, and even a 10% decline, which I think would be a lot, would still help a lot of people. Well, not help a lot of people, but it will still keep a lot of people in a good position with their homes, because they typically will have right now in this market, especially about in 2020, 2021, you probably have 80% loan to value, which means you have 20% equity, maybe 25, 30% equity, depending on how much you bought your property for back in the last couple of years. The people that it'll really hurt are the people that just bought, if we do see that decline, which could be possible if rates stay elevated and inventory is not coming to the market. I guess we'll see. Initial jobless claims are still steady and low, and continuing claims have been at 1.7 million for the past couple months. So for those of you who don't know, initial jobless claims are people that basically apply for unemployment for the first time. That was at 239,000 for last week. It's continuing to stay at the 230,000 point, give or take. and continuing claims are unchanged. The same 1.7 million that we've been seeing for the past couple months is the same amount of people that are staying on unemployment. This is something that, if it does break, if we see continuing claims increase, if we see initial jobless claims increase, will help interest rates as well. But we've been thinking that this was going to break. At least I've been talking about it all year, basically trying to find out when the heck jobless claims are going to increase, if they are, and they have not. And I think a lot of it is because people are just taking multiple part-time jobs, like we see in the jobs reports. But we need something to kind of give whatever that is, whether that's a sharp decline in inflation, which if we're looking at the numbers, we won't see till October, or essentially jobs to rise or job openings to shrink, right? Because that's another thing, is we're seeing job openings continue to increase over time. And it looks like jobs are still hiring even in this market. So one of the things has to break, unfortunately, for us to see rates come down. I do think at this point that we are going to see a huge economic downturn in 2024. In my opinion, it's going to be pretty bad, but that's going to help. That's going to help real estate, and that's going to help interest rates as well at that time. So when the economy does bad, typically you see interest rates do well because investors are putting their money into more long-term investments, fixed investments like mortgage-backed securities and the 10-year treasury as well. But at this point, it kind of feels like it's the buildup of a volcano and it just hasn't exploded yet. And I think it will very soon. And that will help rates, but that'll also help hurt the economy tremendously. So I guess we'll see. Do you guys have any questions, any scenarios from last week? Anything that you guys want to talk about specifically? Nope, nothing. No scenarios, no questions. Okay.
I wasn't on last week, so I don't know what you're talking about.
No, last week we didn't have Monday Mortgage Minute. I'm just saying in your business in general, like if you have any sort of scenarios that you came across or anything in your business that you kind of learned this last week that you can share with us.
I have a question.
Yeah.
Hi, good morning. This is Shaniqua with Elite. So I have a scenario with a buyer that she doesn't qualify anymore for any first-time home buyer programs. We just realized she wasn't a first-time home buyer because of her inherited property. We didn't realize that. So I was just wondering, is there any, because basically she has to put down payment, closing costs, all out of her 401k. So we didn't expect for all like 55,000 to be coming out of her 401k. Is there any other programs, or I'm not even sure, does Florida Bond, is that something that she could take benefit of if you're not a first-time home buyer to assist? Because Hometown Heroes doesn't apply to her. Any of those things apply to her, no longer apply to her anymore.
Did she ever live in her inherited property?
She still lives there. It's her parents' home, yes.
Yeah. So yeah, because she took it on as a primary residence, that's the issue. If she had just
Right.
inherited it and sold it, she would have been fine.
Right.
Yeah, if she's on title right now on that one, she's not
On
gonna
3 of them. Her parents have all of their kids on 3 of their properties.
Okay. Yeah, she wouldn't be able to qualify for Florida Bond because that's very specific to first-time homebuyer program as well.
Okay.
There is one called the Chenoa Fund, which I do not like. We can talk about it, but it is down payment assistance. But the person does have to pay it back plus interest. So it usually doesn't make sense, especially if she can pull from her 401k. That'll probably be a better option than going to Chenoa Fund just to get that down payment assistance, because if she borrows 15,000, she ends up paying 22, 23 back over time. It doesn't really make sense for her. But a lot of down payment assistance programs, for the most part, are going to be relative to first-time home buyers. That's what they're geared toward. So,
Okay.
yeah, my suggestion would probably be that 401k would be the best option for her, because the only other option that I would be able to consider would be Chenoa Fund, and it's not going to make sense for her. The rates are much higher than what the market rate is, and on top of that, she pays it back with interest.
Okay. 401k, you pay back or you just have to contribute back?
It depends on if you have enough money in there that you can take it out yourself, but typically you do pay it back monthly, but you're just paying back your own money that you borrowed. You're not paying it with interest or anything like that.
Oh, okay, so it's cheaper for her to do it out of her 401k.
Yeah, correct. Because she's just
Okay.
paying, she's basically borrowing against herself and paying it back. Because that 401k
Paying herself back.
hers. Yeah,
Okay, thank you.
no problem. Any other questions or scenarios? Yeah, Nani.
Good morning, everyone. I have a client that's well, the wife lives here because they have a daughter that needs medical attention. So she received this is touchy, not touchy, but complicated. She received her residency like about 3 or 4 years ago. The husband just received his last year, the end of last year, but he's still working in a different country and they need to buy something here. Would they be able to qualify as a foreign national?
That is a very difficult one. So if he's technically not paying taxes here, he would qualify for national, but she will not. So it just depends on the program that you're looking at. Foreign national programs, they're not going to have low down payment options or anything like that. So
That's fine. That's
Yeah.
fine. They're bringing the money from their country, but I just want to see, would they still be able to qualify will he still be able to qualify as a foreign national?
Yeah, technically, because he doesn't pay any sort of U.S. taxes, even though he has his residency, he hasn't taken advantage of it. He still doesn't live here.
Great.
You have a case there.
Okay. Okay, cool. So the down payment would be like 25-30% down?
Most likely, yeah.
Okay, and then you just need a letter from his bank, a letter of credit from his bank, and a job letter from his country?
So you could do the full paperwork, which is a pain in the butt, which would be trying to check credit, income, and assets overseas, or you could do foreign national DSCR, which would be much easier, where we just show the assets, and that's pretty much it. As long as he has a down payment for it, he'll be able to do it. So it just depends. Obviously, the DSCR version is going to have a higher interest rate for them, but less paperwork. The full doc is going to be much more paperwork and lower interest rates. So it depends.
Okay, cool. All right. Thank you very much.
No problem.
How much interest would that be, that approximately what they charge a foreign national? I have a foreign national that wants to purchase here as well.
If you're talking about DSCR, probably right now at 11%, give or take, 10, maybe 10,
Okay,
11,
and approximately how much down do they need to have?
25, 30 is usually what they're going to ask for.
Plus closing, right?
Yeah.
So I'd tell them to at least look at about 35%.
Yeah. Yeah. 35%
Okay.
all in should be fine.
Okay, correct. Thank you.
No problem. Any other questions, scenarios? Or basically a good story of something you guys overcame, or how you got business somehow, some way? No? Well, I do want to mention I was at a networking event this weekend of a friend of mine of just entrepreneurs. So it was the first time I was on it. It was on a boat, and we were actually walking around speaking to people about different businesses that they did. And it was all people relatively millennials, probably within the age range of most of us here. So what I'm going to do is the next time that he does have the event, I'll let all of you guys know. So that if you guys want to show up and network with people that are not specifically only in real estate, but that are entrepreneurs and have different businesses that they do, you guys can join, because I had a very good time. I had a lot of meaningful conversations while I was there as well. So that's kind of something fun that I did this weekend. But it is 10:30. If you guys don't have any other questions or any other scenarios for me, I hope you guys have a good week. Anything that you need, just reach out to us. Reach out to me or reach out to the office, and we'll take care of you guys, okay?
Thank you.
No problem. Thank you. Have a good one.
You too.